Good morning, everyone, and thank you for choosing Market Briefing analysis of today's financial news. Every day, our goal is to provide you with a thorough and knowledgeable analysis of the most relevant financial news to help you navigate the complex economic landscape. Let's begin our daily review. Financial news, June 13, 2023. We see the dollar sinking to a 15-month low amidst a risk-on mood in the markets. The weakening of the dollar comes as U.S. futures climb, indicating a positive sentiment among investors. European stocks are also holding gains from yesterday's rally, with the Stoxx 600 index surging 1.5%. One notable company benefiting from China's reopening is Swatch Group AG, the maker of Omega and Longines watches, whose shares have rallied almost 6%. Additionally, Watches of Switzerland Group plc, the largest retailer of Rolex watches in the UK, has seen its shares soar 10%. The increase in profits for these watchmakers can be attributed to the resurgence of consumer demand in China. Investors are reacting to the latest data released on Wednesday, which showed a decline in the U.S. inflation rate to a two-year low. This easing of inflationary pressures alleviates concerns about higher interest rates and a potential recession. Later today, a report on U.S. producer prices is expected to show a decline from a year ago, further reinforcing the trend of decreasing inflation. Economists surveyed by Bloomberg have estimated this decline based on the ongoing goods disinflation and the loosening of supply chains. The MSCI Asia Pacific Index is also experiencing gains, heading for its highest close in over 3 weeks. Hong Kong stocks have recorded some of the biggest gains in the region. This positive trend in Asian markets follows a meeting between Chinese Premier Li Qiang and senior executives from companies like Alibaba Group Holding Limited and ByteDance Limited, indicating a potential end to the government's crackdown on the technology industry. Some prominent money managers predict further weakness for the dollar as U.S. exceptionalism diminishes. They believe that the recent underperformance of the dollar reflects a shift in market sentiment towards being short on the currency, as the terminal Federal Reserve policy rate appears to be reaching its peak. In the bond market, yields are showing a general decline. The yield on two-year treasuries, which is particularly sensitive to imminent policy moves, has dropped around 6 basis points to 4.68%. This decline follows a 13 basis points drop on Wednesday when the inflation data was released. To recap the U.S. inflation data, the Consumer Price Index slid to 3% in June year-on-year, down from 4% in May. The core measure, which economists consider a better indicator of underlying inflation, dropped to 4.8%, the lowest level since 2021. While traders still anticipate one more rate hike by the Federal Reserve this month, the likelihood of further increases appears to be diminishing. We start with the latest U.S. inflation data. The June figures show that headline inflation rose by just 0.2% compared to May, and 3% from a year ago, marking the lowest level since March 2021. The Consumer Price Index figures were 0.1 percentage points lower than the Dow Jones estimate. When excluding food and energy prices, the core Consumer Price Index increased by 0.2% on a monthly basis and 4.8% on an annual basis. Following the release of the cooler-than-expected inflation report, U.S. stocks experienced gains, with the S&P 500 and the Nasdaq Composite reaching their highest levels since April 2022. European markets also traded higher, with the benchmark Stoxx 600 surging 1.5%, led by a 3.7% rise in the mining sector. In other news, Elon Musk, CEO of Tesla and SpaceX, and owner of Twitter, has revealed his new role as the leader of Shy, an artificial intelligence company focused on understanding the true nature of the universe. Shy is expected to compete with companies like OpenAI, Google, and Anthropic. Musk is set to provide further details about the company during a Twitter Spaces chat on Friday. Meanwhile, Disney has extended the contract of CEO Bob Iger by 2 years, keeping him in his role through 2026. This decision suggests that Disney may have concerns regarding its succession plans, as Bob Chapek, who was supposed to be Iger's successor, was unexpectedly ousted. China's trade activity in June showed a significant decline, indicating that the country's economic slump is not yet over. The dollar value of China's exports plunged 12.4% compared to the previous year, surpassing economists' expectations of a 9.5% drop. Imports also fared poorly, sinking 6.8% on an annual basis. Before we continue with our analysis, we'd like to remind you of your support for our channel Market Briefing analysis of today's financial news. If you're enjoying this video and find our content useful and engaging, please consider giving it a thumbs up and subscribing to our channel. This helps us grow and bring you even more quality content. Now, let's get back to the financial market news and the latest updates. Looking ahead, traders are closely watching the Federal Reserve's next move. The positive CPI reading for June has led many to believe that the Fed's hiking cycle may soon come to an end. However, Wells Fargo Securities' Michael Schumacher advises caution and suggests paying attention to an asset that will benefit from the Fed's last rate hike. The latest economic data and market movements paint an interesting picture. The U.S. inflation rate remains subdued, providing hope for a continued drop in inflation without causing a spike in unemployment. This optimistic scenario has led to enthusiasm in the market, with the S&P 500 and Nasdaq hitting a 52-week high. Traders are increasingly betting on the Fed keeping rates steady after its upcoming meeting, indicating a potential end to the hiking cycle. The Producer Price Index, set to be released later today, will provide further insight into the future direction of the Fed's policies. Move Pulse Survey, Elon Musk Edition. Will Tesla have a ChatGPT-like moment? Share your views here. Key events this week. Eurozone industrial production, Thursday. U.S. initial jobless claims, PPI, Thursday. U.S. University of Michigan consumer sentiment, Friday. U.S. banks kick off earnings, Friday. Some of the main move-in markets. Stocks. The Stoxx Europe 600 rose 0.1% as of 8:29 a.m. London time. S&P 500 futures rose 0.2%. Nasdaq 100 futures rose 0.4%. Futures on the Dow Jones Industrial Average were little changed. The MSCI Asia Pacific Index rose 1.6%. The MSCI Emerging Markets Index rose 1.4%. Currencies. The Bloomberg Dollar Spot Index fell 0.1%. The euro was little changed at $1.1140. The Japanese yen was little changed at 138.48 per dollar. The offshore yuan was little changed at 7.1723 per dollar. The British pound rose 0.2% to $1.3013. Cryptocurrencies. Bitcoin rose 0.2% to $30,408.85. Ether was little changed at $1,872.76. Bonds. The yield on 10-year treasuries declined 3 basis points to 3.83%. Germany's 10-year yield declined 7 basis points to 2.51%. Britain's 10-year yield declined 6 basis points to 4.46%. Commodities. Brent crude rose 0.3% to $80.47 a barrel. Spot gold rose 0.1% to $1,960.19 an ounce. In conclusion, we'd like to thank you for watching Market Briefing analysis of today's financial news. If you enjoyed our insights and found the information helpful, please consider leaving a like and subscribing to our channel to stay updated with future analyses. Thank you again for your support, and we'll see you soon with more news. Remember, the information in this video is purely informational and does not constitute investment advice. Always consult with a professional before making financial decisions.